We have a viewer who is looking for small personal loan options. We're speaking about less than $7,500. And his FICO is 593. And he says, I don't have verifiable income, so banks and credit unions don't want me. I need help. If you are in a similar situation, I want you to listen carefully because we are going to spill a lot of beans. So at the end of this conversation, you'll have all the answers you need to get the small personal loan that you are looking for, even with poor credit. Don't you go anywhere. You're going to love today's conversation. I guarantee. Edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous if you already asked me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, we have a case that was brought over to us by a viewer, one of our beloved viewers. And he basically says that he's looking for small personal loan options. And any loan below $7,500 will be good. And he has a FICO score of 593. He doesn't have verifiable income, so banks and credit unions, for that matter, do not want him. So he wants help. So what's really going on here? Dear viewers, we know you are very smart. So I'm going to summarize the case for you. So if you want to pitch in, if you want to chime in, if you want to contribute your guidance, your expertise, your advice, please feel free to do so. So we have a 37-year-old male. His name is Krishna. Krishna, I know that you are listening. Krishna, we have, of course, hidden your last name. So Krishna lives in Henderson, Nebraska. Okay, he is divorced with 2 children. And the thing is, right now, he owns a souvenir shop. Okay, so the shop currently brings in about $75,000 a year on average. And so his net profit last year was $18,000. So I'm just trying to give you the financial position of Krishna so you have a clear idea. So even though he has a FICO score of 593, he's able to bring in last year $18,000. The problem is he doesn't have verifiable income. In other words, he's bringing in money, but the way what we understood was that all of the transactions happen in cash. So everything was cash. So people are just, shop customers, they pay in cash. So he doesn't have any electronic sales. He doesn't do things electronically. So this is why he cannot verify the income. Okay. And so his FICO score is 593. His credit utilization ratio is 39%. Okay. So CUR 39%. His DTI, his debt to income ratio, is 43%. So those two numbers are kind of high anyway. Credit utilization ratio 39%, DTI to 43%, kind of high. And he needs just a small loan. So a small loan around $6,000. The only thing is, Krishna, you did not actually articulate whether you needed the loan for your business or you needed the loan for personal reasons. Okay. You just said, I want a small personal loan. Okay. So you said personal loan. So it has to be personal. But again, it doesn't matter. You could be using the cash for your business also. And the thing is, you made 18 grand last year. Where did that money go? I mean, those are questions I will be asking later on anyway. First things first, Krishna, I want you to analyze your financial situation. Before getting the small loan that you were looking for, what is your situation looking like? In other words, are you really scraping by, or are you hanging in there, financially speaking? The reason why I'm asking this is that, as I just said before, you brought in last year $18,000. Okay. Where did that money go? I mean, obviously, your DTI, your debt to income ratio, is high, which means that you have a large outstanding loan amount. Your CUR, your credit utilization ratio, is also high, which means you are keeping high balances on your credit cards and lines of credit if you have them. But my question is, I really want to know where the 18 grand that you made last year went. You need a small business loan, of course, but you got to think about your financial situation. So I want you to dig into your balance sheet, your assets, your liabilities. Krishna, talk to me about your assets. How much you keep, or how much you currently have in cash? Do you have a business account, or is your shop a sole proprietorship? In other words, you don't run it as a business, but you run it as a sole proprietorship, as an individual business. Okay. And so we have to think about your obligations, so your assets. but also your liabilities. Those two important elements will constitute will help you determine your net worth, because net worth equals total assets minus total liabilities. And the thing here is that you need to find out where your money is going, and if you are spending more than you should. Krishna, this is really important, because this is how you're going to find out whether or not you have you are actually on the right path, or on a path which you should change anyway. If you are looking for an emergency personal loan, that means that right off the bat, things are not set up properly. Okay, so when you analyze your financial situation, you want to analyze your balance sheet, your cash flows. In other words, your cash inflows and cash outflows. You want to analyze your income statement, your personal income statement. Very important. I want you to be very careful here. Krishna, before we give you solutions and solution ideas, you got to be really careful about not only your personal financial situation, but also your business's financial situation. And the thing is, I was just asking you earlier about your business. Are you running the business as a single member LLC, as a multi-member LLC, in case you have other partners, other members in the business? Or are you just running the business as a sole proprietorship? Okay, in this case, you would need to have a DBA, a doing business as. But the question for me is, what is the financial? How is the company doing financially? And are you able to separate your financial affairs, your personal affairs, from your business's affairs, which you should anyway. But if we were to look at the company's financial performance, and basically you want to look at a few things, okay? Of course, you want to look at the balance sheet. It's really important to know the business's assets and liabilities. You got to think about your income statement, because you said that last year you brought in your net profit was $18,000, which means that you have a clear idea about what's called the income statements. And an ancillary question that I want to ask you: how did you determine your net income, your net profit? Are you using accounting software such as Xero, Expensify, QuickBooks, Wave, or are you doing things manually? Or are you doing things like, on a piece of paper, or just in an Excel spreadsheet? This is important, because the fact that you cannot verify your income means that you are doing things manually. It means that you don't have an electronic trace of your sales. Now, I'm not going to comment on whether or not this is a great strategy here, because it's not important for all intents and purposes of this conversation. What I want to say here is that it wouldn't make sense for you to use accounting software if you're not tracking your sales electronically. In other words, either you automate things and you just you invite technology in your operations, or you don't. Okay, so the question for me is, are you sure that you made $18,000 last year? This is why I was just asking you earlier, where did the money go? And you must be parking the cash somewhere. Don't tell me that you don't have a bank account. I mean, the thing is, if you don't have a bank account, that will be really worse, especially if you have a business. Okay, so what about your cash flow statements? Those are things you want to look into. You want to look at your cash flow statement. We'll talk about your operating cash flows for the business, your investing cash flows, and your financing cash flows. Now, let me give you a few solutions here. Solution idea number one. What you want to do is you want to apply at the bank where you keep most of your money. And again, I hope that you do have a bank account. Krishna, reassure me, please. Do you have a bank account? If you have a bank account, I want you to go to the branch. See, if you have 1 or 2 or 3 bank accounts, that's fine. But I want you to go to the branch of the bank where you keep most of your money. In other words, the bank where you have a stronger relationship. You want to start from there. Because see, the thing here is that you're looking for a loan, a small personal loan, and you are probably applying for a loan online. But it's always important that you apply where they already know you. If they know you somewhere, you want to start there, okay? And when you go to you want to go to a branch. You want to see where you stand financially, but once you do that, you want to go to a branch, physical branch, and you apply there. Make sure that you are able to prove your capacity. So banks actually look at four things before approving your personal loan. Whether it is a small loan or a big loan, they look at capacity. So they see if you are able to repay the loan. They look at collateral. Okay, they see if you have a personal asset that you can pledge. They see if you have the capital. In other words, you have the required cash inflows and cash outflows to basically repay the loan, because it's not just about revenue though. It's about cash flows and income, growth in cash flows and income. Okay, and they look at the conditions. In other words, are souvenir shops making money nowadays? Because they want to look at the industry. I mean, you live in Henderson, Nebraska. So is the industry really good in that location, in that geography? So those are four things I want you to do. So I really want you to apply at the branch where they already know you. This will help you a lot because you already have the relationship. You already have one or two accounts with them. They see some cash inflows and cash outflows. Even if you cannot verify income, even if you cannot show them 100% with 100% accuracy that your income is 18K whatever, they see some cash inflows and cash outflows, and they can actually reconstruct. Banks have experts on staff who can reconstruct your financial statements, at least parts of it, based on your cash inflows and cash outflows on your bank statements. Yeah, they really know how to do that. I've been there, done that myself a few years ago. So that kind of expertise you have them in banks. Solution idea number 2. Krishna, I want you to apply for an online loan. The thing is that some online loans have better conditions than bank loans, for that matter. Okay, so you can apply for an online loan at SoFi, and listen, your poor credit score is not going to preclude you. It's not going to prevent you from getting the loan. Not at all. Because see, lenders look at a constellation of factors. They will look at you. Of course, they'll look at your FICO score. Yes, but they'll look at your cash inflows also and your cash outflows. Okay, so for instance, SoFi, you have Upgrade, you have Lightstream, you have Upstart, you have Best Egg, and you have Marcus by Goldman Sachs. And we have actually reviewed all of this lenders, online lenders, in separate videos in the past. So if you want to learn more about how to get a loan with poor credit from any of these players, please let us know, or you can go into our catalog of videos and pick the video that actually applies to your situation. Okay, when we talk about online loans though, there are pros and cons, obviously. So here are the pros. You have lower starting APRs and credit cards and personal loans. You have fixed rates and monthly payments. And you have flexible loan amounts, even if you don't have a high FICO score. And you have no collateral. Some of these lenders, they will work with you even if you don't have collateral to pledge. But one thing for sure, you might have a higher APR though. So if you have a low FICO score and you are not able to verify income, you might have a high APR. So those are the pros of online loans. What about the cons? Well, maximum APRs can be high. Okay, if you have a low credit score, APRs on personal loans can be higher than credit cards and the personal loans also. Than credit cards and lines of credit. You might have some possible fees. Okay, as a borrower, you may have to pay fees like origination or late fees along with your loan payments. And you basically can have an increase in your total debts because taking the personal loan, even if it's a small emergency loan, adds debt to your budget. So it's important to factor in the additional obligation and feel comfortable about paying it off. So it's all about making room for an extra debt, an extra loan in your budget. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a conversation today about a case that was brought over to us by Krishna. So, Krishna, you basically are a 37-year-old male. You live in Henderson, Nebraska. You are divorced with 2 children. You own a souvenir shop, and the shop brings in about $75,000 a year, and that's an average number. And your net profit last year was $18,000, and your FICO score is currently 593. Your CUR is 39%, and your DTI is 43%. And you need a small loan about $6,000. Now, solution idea number 3, Krishna, I want you to try to apply for a small business loan. Yeah, because why? I mean, you do own a souvenir shop. That's a business. I mean, regardless of whether or not the shop has been set up as an LLC, as a C Corp, as an S Corp, as a partnership, or as a sole proprietorship, you can still apply for a small business loan. So why don't you try for a small business loan? The good thing about business loan is that the amount you might qualify for could be higher than if you were applying for a personal loan. Okay, so make sure that you think about your finances. How good are your personal finances before you apply? It's because before you apply for a small business loan, you need to decide where to apply for that kind of loan. And how good are your finances? What type of funding do you need? I mean, you need $6,000 for what? For expansion, for inventory, for a working capital. You know, when do you need the loan also? If you need financing in a hurry, you may want to prioritize online lenders. Okay, and you need to get your application materials, so information about your business, your souvenir shop, financial statements for you and your business, details about the business's owners. In other words, are you the only person owning this souvenir shop, or do you have partners? Okay, information about your collateral, if any, and information about a personal guarantee. So if you want to get a business loan, you might have to post personal guarantee. Do you have assets you can pledge? Okay, and you want to review your small business loan application. So after you've done everything, you need to review the application to make sure that this is indeed everything is filled out correctly. And please follow the lender's instruction when you're applying. So, and you can apply for a small business loan online with an online lender, such as Blue Vine, Cabbage. You can go to a marketplace such as Lendio. You can go to SmartBiz, for example. Those are online and alternative lenders. You can go to your bank rather, and apply for a business loan there. Okay, everything is possible. Solution idea number 4. Krishna, what you want to do here is you want to think about collateralizing the loan. This could boost your chances of getting the $6,000 loan that you're looking for. I mean, $6,000 is a relatively low amount, which means that you don't run the risk. You don't run too much. The risk of you defaulting on the loan is kind of low. Why? Because you are making enough money to cover the entire loan you're looking for. Like last year, you made enough money to cover the entire loan that you're asking for now. $18,000 versus $6,000. So if you want to increase your chances of getting the loan that you need and deserve, please think about collateralizing the loan. That way the lender knows that you have skin in the game. If something were to happen, they can actually just come and repo whatever property you actually pledged. Okay, and so what is a collateral loan actually? So when you take out a collateral loan, you agree to give a lender the right to take the property that's secure in the loan, like a car, home, or savings account, if you fail to repay it as agreed. And the property is considered the collateral on the loan itself. So there are pros and cons to consider before taking a collateral loan. And so let me just go with you here. But before I give you the pros and cons, let me give you a couple of collateral loans. So you have mortgages, auto loans, and secure personal loans are examples of loans that require some type of collateral. Okay, and the thing here is that I want you to familiarize yourself with the pros and cons of collateral loans. So what are the pros? Well, these types of loans are easier to get with lower credit, often lower interest rates than unsecured loans, larger loan amounts may be available, and the potential to be good credit builders. Especially Krishna, you are currently, your income is not verifiable. Okay, but I'm sure that you do have personal assets. So if you cannot verify your income, you can at least pledge your personal assets and get the loan that you need and deserve. What are the cons of a collateral loans? So the application process can be complicated, and there is a high risk if payments are not made on time. As I said before, the lender can come and repo your property. Thank you so much for your attention. I really appreciate it. So this was the case of Krishna. So Krishna, I hope that you listen to our solution ideas. If you have questions, please email us or put it in the comment section. We invite also our beloved viewers who are very smart. Please pitch in if you have anything else to add, or if you are going through something similar to what Krishna is going through. Please let's have a conversation. Let's start a conversation so people can pitch in. Everybody can just share their experiences, and we can all learn and grow. Thank you so much. God bless you. I will see you next time. But until then, remember, stay marvelous.